Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about IRIDIUM Communications INC quarterly report. IRIDIUM Communications Inc. offers a diverse range of businesses and services, including mobile satellite communications for land mobile end users and aviation sectors, broadband terminals, embedded devices, and handsets for maritime vessels, satellite-based IoT services, hosted payload, and other data services, post-paid and prepaid mobile voice, and data satellite communications, push-to-talk, broadband data, and Internet of Things, IoT, services, satellite time and location services, personnel tracking devices, and asset tracking devices for equipment, vehicles, and aircraft specialized communication solutions for high-value individuals and military/government agencies, mobile communications and data devices, including secure satellite handsets maintenance services for the U.S. government's dedicated gateway, various accessories for its devices. These products and services are sold to commercial end users through a wholesale distribution network that includes service providers, value-added resellers, and manufacturers. The stock price of IRIDIUM Communications Inc. has significantly dropped by over 36% in the past year due to several factors. A major contributor was the company's Q2 2025 earnings report, which showed lower than expected earnings per share and a downward revision of its service revenue growth guidance. Despite reporting robust financial results for Q3 2025 that surpassed analyst expectations, the stock still declined due to investor apprehension about the competitive landscape, particularly from Starlink. Additionally, concerns over declining government voice and data subscribers, tightened full-year service revenue growth outlook, and lower equipment sales also contributed to the decline. These factors have led investors to reassess risks within the satellite sector, resulting in a significant drop in IRIDIUM's stock price. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by the increase in services revenue, particularly commercial services, engineering and support services, and IoT data revenue. The acquisition of Sattles, Inc. also contributed to revenue growth. Additionally, an increase in billable subscribers worldwide further boosted revenue. On the other hand, revenue decline can be attributed to several factors. Subscriber equipment revenue decreased due to a decrease in handset sales and short-burst data device sales. Commercial broadband revenue declined due to decreased ARPU and non-recurring revenue recognition in prior year. Government services revenue also experienced a significant decline. Furthermore, increased competition from other satellite service providers, including SpaceX, and the expansion of terrestrial-based cellular phone systems put additional pressure on revenue. Net income and profit margins experienced significant growth between 2024 and 2025. The company's net income has seen a substantial increase. Net income rose by 52% from $24,446,000 to $37,127,000 in just 3 months, and further increased to $89,507,000 over 9 months. This significant growth is attributed to improved operating income and reduced expenses. Profit margins have also witnessed a notable improvement. Operating income margin has risen from 25.8% to 31% for the quarter, and from 23.9% to 27.5% for the year. Net income margin has increased from 11.5% to 16.3% for the quarter, and from 12.3% to 13.6% for the year. The primary drivers behind this growth are increased revenue from engineering and support services, commercial services, and a decrease in operating expenses. Improved operating income in 2025 has also contributed significantly to the company's financial performance. The company's financial performance indicates a steady increase in its ability to generate operating cash flow. The net cash provided by operating activities has consistently increased over the past 2 years, with a notable jump of $20 million from 2023 to 2024. This trend suggests that the company is efficiently managing its operations and generating sufficient cash to support its growth. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, the total liabilities have decreased from $2,094,834 in 2024 to $2,103,553 in 2025, indicating a slight increase. However, the outstanding aggregate balance under the term loan has decreased to $1,000 $774.7 million as of September 30, 2025. Regarding interest expenses, there is a notable decrease of 3% for the 3 months ended September 30, 2025 compared to 2024, and a decrease of 2% for the 9 months ended September 30, 2025 compared to 2024. The interest expense has also decreased by $7.4 million for the 3 months ended September 30, 2025, and $21.9 million for the 9 months ended September 30, 2025. Overall, while there is a slight increase in total liabilities, the company's interest expenses have significantly decreased over the past year. Management's outlook on company strategy. The company plans to build on its existing market strengths by focusing on specialized services and evaluating potential acquisitions. Despite increased competition from SpaceX, management remains optimistic about the company's outlook and strategy. The company expects a significant increase in net income of 52% compared to last year, indicating a positive financial performance. Management is confident that the company's primary sources of liquidity will meet both short-term and long-term needs. To ensure this, they have implemented a strategy to access various sources of liquidity as needed. Additionally, the company plans to refinance its term loan at or prior to maturity and continue paying regular cash dividends. Share repurchases may also resume in the future, further indicating management's confidence in the company's financial stability. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, with $46.9 million distributed in 2025 and $49.1 million in 2024. Additionally, the company has also engaged in share repurchases, spending $185 million to acquire 6.8 million shares in 2025. Concerns about inventory buildup and supply chain disruption are evident in the company's financial summary. Inventory levels have increased by $5,342,000 over 9 months, indicating a potential buildup. Furthermore, non-cancelable purchase obligations for inventory purchases total $11.6 million, suggesting that the company may be committed to purchasing more inventory than it can currently utilize. Supply chain disruption is also a concern due to the reliance on single-source suppliers for critical components and periodic shortages caused by external events such as natural disasters, global pandemics, or tariffs. Additionally, the possibility of government shutdowns could delay or suspend funding for U.S. government contracts, further exacerbating supply chain issues. That concludes the financial summary for Iridium Communications Inc. Feel free to comment below, and I will be happy to answer them when possible.